that should be good to go. Good evening, friends. How's everyone doing? Welcome to Casual Friday. If you can hear me, see my screen, all the usual stuff, let me know as well. We can proceed with full confidence, so to speak. Let me just pop out chat as well. Perfecto. Hello, Dumbo, Ryan, Quark. Where is Don? Don is doing some family stuff. He spent the night doing victory laps on Twitter, tweeted more in one night than he did in the past 2 months, and now he's taking Friday off, so good for him. I'm just taking the piss, but he is away. Yeah. I promise I'll do my best to keep Casual Friday actually casual and answer your questions, have a chat, give it a bit more of a, Friday vibe to it. Sniper says the posh boy is on tonight. Yeah, totally, man. Moved to the country when I was 10 years old, but yeah, proper British in it. Anyway, guys, we've got a few things to talk about, and girls. And as always, if there's stuff that you want to talk about, just ping it in the chat. I'll try to answer your questions. Do all that fun stuff. As for the intro, first of all, thank you to Bybit for sponsoring Technical Roundup. Absolute legends. YouTube channel, newsletter. It's a welcome change that exchanges are now supporting kind of content creators from traders, as opposed to them having to form paid groups and all sorts of weird stuff. So that's nice. Make sure to click the link in the description so at the end of the month we can get some bread and water as per our contract. That would help a lot. I think that's all for intro stuff. Just like the video if you like Technical Roundup. Also, I hope you've been enjoying the non-live stream videos on the channel as well. As I've said before, I really want to make those a weekly thing, that we get one video a week that's not a live stream on the channel also. That'd be pretty cool. It'd help us out with the algos, and just so there's a balance of content, of live streams that are replayable, but also just your normal YouTube videos. That'd be pretty cool, I think. And once a week is a pretty reasonable schedule for that sort of stuff, right? If anyone happens to give a shit, I've got a list of content stuff that I kind of want to work on. So in case you can't read this, it says the first one, more leverage equals more gains, which is a video, because my article on leverage is over 2 years old and a lot of people just don't bother reading that, so maybe a video will help. Entry triggers article, it's currently in video form on my channel, but it's not that good, and a lot of my views have changed since then, and I think that video is generally one of the weaker ones among the technical analysis series, so that would be a good article, I think, to do. Profit-taking guide for altcoins, maybe not so necessary now, haha. But, maybe nice to have that conceptually anyway. That'd be helpful. Is Tezos the next link? I mean, lol, you can see this link, this list is a bit old, but that's when all the Tezos link comparisons were coming out the gate, so maybe that's a bit dated now. I'm gonna even make a note of that. Bit late, mate. First test, best test clarification. Does anyone want to talk about this today for just like 10 minutes of what I mean by first test, best test? I could literally do that in like 5-10 minutes during this stream. That'd be a very important kind of technical thing because it's something I rely on a lot. We can do that today if there's interest. And then DeFi watch, again, maybe a bit late, mate. Not going to jump the gun. And then PA rabbit hole, this is one I really want to write. And it's something I've alluded to a lot before, where essentially all the support resistance, the range stuff, the order block stuff, the supply demand stuff, like I've been down the price, even the kind of market auction theory guys who say daily VWAP, point of control, poor highs, poor lows, all of that sort of stuff. So the PA rabbit hole article is basically how I've been through a majority of those systems to some significant depth, and how you just kind of end up with the same levels in the same areas. So your attention, everyone calls the same structure different things, and there are some lower time frame reasons for that, etc., etc. So this is what I really want to write. I might even do that this weekend. Honestly. It depends how my schedule lines up, but that sounds like a shout. The thing with me and working just on content stuff when I'm not trading, or if I'm taking a break or whatever it may be, there's a sort of learned procrastination with it, because my output when I sit down to write and do content is actually pretty high. That was the case throughout university as well. We'd have like 10,000 word assignments, 8,000, 10,000 type of word essays. It would take me about 3 days to write from scratch, and not even like binge writing all day. It's just something that comes quite naturally. But with that, obviously I'm like, oh, I will write the PA rabbit hole article. I'll just sit down and do it at one point, and then you just keep delaying, and that shit never happens. It's actually the same with videos as well. I don't think I've ever spent more than one sit-down session on any of my videos. They're just all sit down, do it, upload it, get all the examples, do the slides, record it, publish it. It's that kind of process. So if you've ever wondered why there's irregularity with regard to writing, videos, all that sort of stuff, which aren't live streams, it's literally because of this really weird work schedule that I've got. So I think what we'll do, this aside, is we'll first look at the market really quickly, and then we'll do the first test, best test clarification during the stream, and then answer questions, look at some altcoin charts, and shoot the shit. Does that sound good, guys and girls? If it does, we'll just go ahead and do that. Okay, cool. Sounds like we've got a plan. So let me just close this. Right, with regard to the market, I mean, monthly support, however defined, I've got 2 levels on my own chart, but this is just a blank one. The highest close from, when is this, February, and then the most recent highest close from the recent highest close, which is June. That's kind of where the market is now. Part of the reason for the title is, rug pull season. What does it mean? Well, when it's an expression, an idiom, obviously. When you see a rug pull, it's, the visual image is just kind of like the floor, or the rug in this case, being pulled out of somebody's feet. So a very quick, sudden, and usually unfavorable change of circumstances where the foundation for something vanishes in a snap, right? And I feel like with my own personal trading, August was really good to me, mostly because it was just kind of brain dead, long, bullish continuation season. That's just how the market was aligned, at least for ETH. And just being able to catch a chunk of that pie was very profitable, because I got some really, really risk-defined setups, and I kind of hit the golden spot where you're trading high time frame moves, but with lower time frame risk-reward or risk definition. So your risk is kind of capped in terms of low time frame structure, right? Like the M15 or the hourly, but your target is dictated by higher time frame magnets for price. So you've got low time frame risk definition and entry triggers for the trade, but you've got high time frame parameters for exiting or where the market is going. This makes for really... Oh shit, I should add that to my content list. Hold up. Sticky notes. Finding high risk reward setups via time frames. There we go. This is... Excuse me, there's a really loud bike outside. Anyway, this is kind of what I'm talking about, where a lot of really good setups, certainly in trending markets or in momentum continuation setups, or when the market is moving between high time frame kind of magnets for price, this is kind of the golden spot, whereby you enter on a low time frame logic, but it plays out, or you take it towards a high time frame objective. So while normally the trade may be something like this, right? Low time frame to low time frame, if we're using FTA, and that's maybe a 1R, 2R trade, whatever. If you've got the high time frame on your side, you can really afford to get the bigger swings and the bigger moves and the really skewed risk reward setups. So that was, first of all, let me know if that makes sense. If it doesn't, I'll try to elaborate more. But that's kind of the shape that August took for me, certainly the middle and later part as a trading month. So that was really good. The part of the frustration with early September was, first of all, the Bitcoin long with 11.9 like wasn't the best trade in the world. I would still take it again under similar technical circumstances, but I just think since that trade there were much easier trades on the table, even in Bitcoin, and they're ones that I just completely slept on despite having it in my trading plan. Now that kind of stuff I find frustrating. So what I don't find frustrating is executing my system and then getting a negative single outcome from that trade, right? If my system's telling me there's something good here and I act on it and add in accordance with my principles, etc., and then the outcome, I get stopped out or it's a losing trade, whatever. Unless I did something to mess that setup up, like do some really stupid management decision or, mess up my position sizing, etc. If I actually just follow my shit properly, excuse the language, and the setup doesn't work, I'm absolutely fine with that psychologically. It wasn't always the case. It takes a while to get there because you kind of feel like the market should be rewarding you for trading well. Like, I'm doing the right things. Why am I still being punished? You start doubting your system, etc. But it's really been long enough now whereby I've become very process-oriented with trading, and I kind of just focus on doing the right thing and making the right decision, and everything else that, follows on from that is stuff that I really can't control for the most part. So I'm fine with that happens. What I'm not fine with and what still frustrates me is when I make plans and use that same system to come up with a set of circumstances where I think there's a really good trade, and then I miss it due to just kind of being inattentive, complacent. It's not even like unsure or somehow being scared. It's very simply a lack of focus. Does anyone else get that? Like, you miss a setup and it's not like your system didn't trigger it or it was obvious in hindsight. You just weren't on your game. You weren't sharp enough. You kind of took it for granted. You sort of just basically slept through it, right? And so that's kind of how the August-September transition felt for me, where by August, I was mostly pretty on top of things and taking setups that I'd normally be too scared to take, but recognized my mistakes from the previous kind of Bitcoin, the 7K break. I made a lot of mistakes on missing out easy longs then, so, this time around I was like, I'm not going to make the same errors, and that was a good season. And then when it turned to September and really the end of August, beginning of this month, it was a bit more rough, because the Bitcoin 11.9 long definitely wasn't the best trade on the table. It was a bit rushed, I think, because this is another thing I'm still kind of, struggling with to some extent, or certainly trying to improve. If I'm very vocal in a trade idea that I post publicly, so be it via one of these streams or via a Twitter clip or, just something public facing, I'm just so much more likely to miss out when basically mismanage that trade. So how many times, for example, in the past, I don't know, however long this thing's been going on, like 2 weeks, how many times have I talked about this sort of setup whereby you have resistance, the breakout, and then, if the bullish setup being if it gets above the upper boundary, these shorts will feel uncomfortable and the market's going to squeeze towards the high. I must have said that a million times by the time we actually got this bit of price action, right? So if I'm very vocal about a public idea, just out of habit, I've noticed that those setups, it's not that they play out poorly or, those are the worst setups ever. It's just my management and keeping my bias in check. I just get really crappy at executing and managing, because in my mind, I've been so public about this setup, like, I've made it very clear that I'll be bullish if this happens. I almost get this kind of pressure to make sure I don't miss the move because I was so loud about it. Do you kind of see what I'm saying? Again, I don't mean to turn this into a super personal whatever thing, unless you like that sort of stuff, in which case I really don't mind doing the more open book sort of thing. But I've just found that, over the months, it's a long-term thing. If I've been vocal about a setup, I really won't want to miss it, So even if that means taking a kind of shitty trade, but still being able to say, haha, look, I took my idea, I'm not just a charter, I actually trade this stuff, that has landed me in hot water a couple of times, whereas obviously the correct thing to do is to say, yeah, this is my idea, but you know what, it kind of just doesn't smell right, so I'm not going to take it. So there's a bit of a reality check for you and us. Generally, with traders who are more experienced or making it, etc., and I still consider myself early in my trading career, I hope, and student of the game and all of that type of stuff, but certainly in crypto, learned a lot in a very short time. It's not that better traders don't make the same mistakes as beginner traders. You know, the whole FOMO thing and losing sight of context and shitty risk management. Again, excuse the swearing. I'm trying not to do it on this channel. You know, basically the things we like to call beginner mistakes. It's not like those mistakes are limited to beginners. Experienced traders will make those same mistakes, just far less frequently. They're better at identifying them and limiting their losses when they do happen, and then really stepping on the pedal and having more confidence when it comes time to win. Right? So it's not like those errors are eliminated completely. It's just their impact on one's overall equity curve over time are significantly reduced. Right? So like a beginner making that mistake, it could end up in a blown up account, whereas someone more experienced making that mistake could recognize and realize that in time, and it ends up as a scratch or just a, you know, a managed loser. Paul says, just feedback, 5-minute Bitcoin is supposed to be great. Yeah, I'm onto it, mate. There'll be plenty of time for markets, not going anywhere. I did say I'll do markets first, but I kind of got sidetracked. But hey, that's the point of Casual Friday, right? We get sidetracked, we get casual, and perhaps talk about the greater things in life and the trading psychology and all that sort of stuff. And again, I'm always very happy to talk about my thought process and good stuff, bad stuff, whatever it may be. But yeah, if you have any questions about any of that, let me know. Oh yeah, so let me just finish that thought actually. So going from August, September, you know, I was taking good trades in August, and then I just feel like, I was talking to Duck about this earlier today. I was like, dude, it seems like just a number of days ago, it was like, oh, 11.5, weekly level, everything seems great, and you know, directional bias, etc. And then in a snap, in literally 2 daily candles, we've retested 10k. And just the thought of that, if you told me like up here or wherever on the weekly close that we'd be retesting 10k, I think, you know, pretty unlikely set of circumstances. But shit just happens so quickly if you're not on top of things, which I certainly wasn't. You just get caught out, right? So when I'm saying I went from easier setups to really kind of choppy ones, you'll remember we talked on very many occasions how failure below 11.5 would suggest a test of monthly support at 10.7, right? I'm sure you can find dozens of videos like that, and that's pretty much exactly what the market did, right? In no uncertain terms, I mean, why am I missing this sort of setup where the market very clearly breaks down? It even gives 2 retests of the level and then travels in a straight line into 10.7. There's like no excuse for missing that sort of stuff. So as a trader, it's really this that I find frustrating, especially when it's juxtaposed with taking difficult trades. So I'm putting myself through the ringer, taking much worse or less clear setups on other instruments or even in the same instrument, while the market is offering me something I've pre-planned, something I'm ready for, and because of that lack of focus, you know, you end up missing what you've planned and find yourself in uncomfortable positions. I'm sure that's happened to all of you, but that's the sort of stuff I'm really focused on improving, right? And I think we all should be. Sniper said, this is painful, get the duck back, please. I mean, you could also just not watch this live stream, since it's quite clear for the last 16 minutes that it's not duck here, and you can come back on Wednesday or Monday or wherever he chooses to do it. That's also an option. I'm sorry if you don't like this type of content. Perhaps it says more about you that your Friday is here complaining about me rather than doing something else. So, I don't know, mate. There's plenty to click around on this fantastic website. In terms of the market right now, again, monthly 10.7 and monthly 10.3. That's kind of where we're at right now. What I don't want to see is, this is the kind of, I mean, this area really for me can't fail on a weekly basis if there's going to be any sort of bounce or you know, any trend continuation. I think a lot of people have their eye, not unreasonably, on the consolidation at sort of 8.7 to 9.6. We've kind of tested that level in some respects, like not on the weekly time frame, sure, and there, you know, price may come back and fill in this wick with another drop or whatever else, but certainly on the daily time frame, if your argument that price has to retest this area of structure one way or another, if you were to just look on the daily time frame, that's kind of what's happened. If we define the same range on the daily time frame, even using the highest close in the wick, that test has already taken place, right? So for me, that retest has kind of already occurred. So I don't see. I'm not as compelled at these levels to start screaming lower and lower. Generally, a weird observation about trading psychology and just how participants respond to the market. You know, while the market's, let's say, up here, or in my case, if you're buying up here, 11.9, 12k, NH says smash them likes. I agree with him. Fewer than 100 likes, very cry face, I am sad. Anyway, what you'll see, and this is a very weird phenomenon, like, I guess it makes sense in terms of human psychology, but while the market's at high places, or, you know, relatively high, whatever that means, so like up here, say, 11k, 12k, doesn't matter. When people are talking about pullback levels, they'll normally look at like the first level or like a very shallow level and like comfortable pullback levels. Like 10.7, yeah. And that's a level that I was a fan of, even though I made it very clear that wicks likely are much lower, and that's absolutely fine. But generally, let's say the market's up there, everyone's comfortable with 10.7. Now, the fascinating psychological thing is as price starts to drop, people's targets start to drop as well. Because there's a fear as price approaches or even temporarily spikes through those levels. Which, in terms of, I suppose, psychology, unless you've got some amazing momentum edge which tells you that these levels shouldn't be bought, it's just pure kind of cope and fear at that point, right? You've determined, or you know, you've got a predetermined level or area wherever that you think is going to be significant for the market, and when it actually, when there's a chance that it comes into play, you just start moving your targets down. Like, yeah, 10.7 is good, but maybe 10.3, and then it's kind of at 10.5, and you think, okay, maybe 9.6, and then it gets to like 10.3, and it's like, okay, maybe 8.7. It's just it's a hilarious kind of evolution, I suppose, in terms of how trading works. That the lower price goes, the lower the price targets, even if the earlier levels of support resistance haven't been invalidated. Isn't that weird? I always find it pretty interesting. So yeah, in terms of market analysis type of stuff, I still think on a high time frame, I want to see weekly closes. If we're going to stay in this kind of mid 10k market structure retest area, weekly closes need to stay above 10.3 for me. And that would then suggest at least a retest of 10.7 and a return to the previous range low, some semblance of structure closer to 11. That's what makes sense to me right now. I think if this daily candle gets stuffed and we just kind of float back to 10.3, then the weekly argument of trading back within the consolidation, this one here, gains some validity. Generally, I'm very cautious, which is like a fantastic TA term to use when you're unsure. That's because I remember the last time I bought the retest of a high time frame level break, and I ate a plate of shit. Again, excuse the language. Mother must be so disappointed. And the reason I'm so cognizant of that type of price structure, you know, the break, the break, oh, this looks good, the retest, oh, I'm buying here because it makes sense, high time frame support, market structure, blah, 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 and then the market vanishes. The reason that's so memorable to me is because I literally did the same thing at this level here. And you can see this is arguably, I mean, in terms of market structure, it's certainly different because, you know, you could argue that there wasn't such an obvious shift, but this is a fantastic level back at 9.6, right? You had this prior lows into this highest close, very clean break of the level. Market comes back and retests it. I remember I bought this retest, and then obviously what followed, you got this really scary bearish engulfing candle, and then just straight continuation lower. So that's why that's why the weekly time frame is where my attention is in terms of this high time frame area. 10.7, 10.3, it's the same cluster of monthly wicks and closes, right? This area, which is fairly self-explanatory. That's where my evidence is on the weekly time frame, or why I'm looking at the weekly time frame, simply because in the past, these high time frame retests, if they fail on the weekly, generally, you know, no fake outs on that time frame if you get clear failure. And there's, you know, you can't really ask for much more in terms of clear failure than a weekly scary looking engulfing type of candle. This weekly candle in its current form, and again, there is some time, etc., it's arguably more bearish if it closes below support than this one. Why? Because in this instance, we've got extra confluence in the form of a spike below previous week's high, and then a presumed close at or below support. Whereas here, contextually, you know, you got a retest and the next week just broke it, and the momentum follow through was still absolutely mental. So in terms of Bitcoin TA, just to be clear, let me just delete this for a moment and go back to my own chart. Oops, that's ETH. Yeah, so in terms of where Bitcoin is, I've got a little shelf at 10.7 and 10.3. That's really, I think, the significant or even the extreme boundaries of the bullish retest thesis when it comes to weekly market structure, etc., etc. If that's not enough, and if 10.3, you know, we've even traded as low as 10, below 10 on this wick. If that's not enough to get some sort of high time frame strength and closes at least within the boundary on a weekly basis, then that's bearish. I think we trade back within the range. And there's this argument that, you know, it's, well, we could close below support at 10.3, but then the next support is at 9.6. And while I do think that's valid in terms of a level-to-level perspective, I think the loss of the mid 10K area generally would be far more significant. Like, it wouldn't make sense to lose such a big level and then reverse the trend, or just get like a huge bounce, like a couple of $100 or a few $100 below, right? I think that the mid 10K is so important structurally. If that's lost, we will most likely fall back within this range, but I would expect the range low to be tested at that point. That's just a feature of my system generally, where some levels are way more important than others. So if I've got, even on a high time frame basis, like an important level here, and then another level nearby, and if this is like, you know, 8 out of 10 in terms of importance, and the level below is, you know, reasonably close, high time frame, etc., but let's say it's a 5 out of 10 or a 6 out of 10, or basically less significant than the one above it, it just simply doesn't make sense for me to say, well, if this level breaks, then I'm going to get really bullish at this level, right? Because if the significant level is broken, I don't expect the weaker level to be trend reversing, right? It might offer a bounce, it might give an intraday scalp opportunity or whatever else, but generally the weight for the move, WEIGHT, is going to come from the high time frame level, not the less significant level. So if mid 10K breaks, I don't want to knife catch blindly at 9.6, perhaps anything beyond an intraday trade, and I'll just be looking more towards trades back within the old range. Does that kind of hierarchy logic make sense to anyone? Okay, cool. Cool. Yeah, spelling bee, WEIGHT. So that's kind of my Bitcoin analysis for now. There's loads of time until the monthly close, right? As insignificant or untrustworthy as it may seem. You know, buying here, you might seem like a total idiot in a month's time if we get something like this, right? Just a nuke back within the range and like, oh my god, this absolute melon bought the deviation, etc. Like, all the hindsight chartists will come out and give you smack, that sort of thing. You might also look like a genius, and this will look like a TA textbook, you know, close above the level, retest the level, you buy, and some guy on Twitter will have 20,000 likes teaching the break and retest pattern because this type of thing happened. Like, you know, lots of time for that to materialize. But if we were to use the monthly time frame exclusively for making that sort of determination, then we wouldn't be able to trade very much because this time frame is so bloody slow, right? So what I like to do to compensate for that, as you'll have heard me say a million times, I hope, is you need to make a time frame sacrifice in many cases. If you're trading monthly levels, you need to at least derive some sort of evidence on the weekly time frame as to whether your idea is correct. If you're on the weekly, you most likely need to look at some 3-day or daily candles to see if your idea is correct. And if you're trading on the daily, it doesn't hurt to look at some intraday candles to see if your idea is correct, etc., etc. I think the market's far gone, and you can. Donald should actually make a video about this because he's talked a lot about, like, casually with regard to edge erosion in a strict candle close system. It's something he's experienced personally with regard to it. Used to be so easy, like weekly close, weekly level, daily level, yada yada, super straightforward, very low fake out rate, and just generally a very robust logic for a system. We're 3 likes away from 100, make my dreams come true. So he's talked about how it used to be, very linear in that regard, and how over time you got far more a higher frequency of candle close fake outs and having to rely on other time frames and all that sort of stuff. So plenty of time here. From the available evidence, I'll say we're still at monthly support, but as mentioned, for the sake of being able to actually trade, I think it's reasonable to look at how the weekly candles close at monthly support. Any closes between levels, so between 10.3 and 10.7, I'll probably be neutral-ish, probably leaning bearish just because of like the overall structure of this breakdown. Any closes below the lower boundary on the weekly basis, below 10.3, I think it's very likely that we spike, well, at the very least reach the range at 9.6, but I certainly won't rule out trading within it as well. And then a weekly close above the upper boundary, I think there's a significant chance of some sort of rounded retest of 11.4, and then we'll have to make a determination at that point as to whether the low is in or not. I generally wouldn't mind trading within this cluster, because if we look at it from a zoomed out kind of higher time frame perspective, Dimitri says, thank you for using regard to correctly. It drives me nuts people say regards to when they aren't talking about a well-wishing. Yeah, absolutely. Absolutely. I try to keep things crisp with regard to language. Anyway, so for those of you who've watched almost anything on the channel now, because I drone on about it so much, when you get the impulse move, consolidation, impulse move, the consolidation, blah, 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 useful technical structure. And I think if we trade back within 8.7, 9.6, it suits that or this pattern quite well, because you had an impulse move and then a consolidation and then another impulse move. And I'd even give this extra weight and significance because the impulse move that followed this consolidation, right, impulse move that followed the consolidation actually broke market structure and made a higher high. So this adds extra technical significance for the cluster itself, which is a pretty big deal. Again, quickly flashing back to Cred's trading journal sort of thing, a lot of the time, as counterintuitive as it may seem, especially given how my system is set up, I will eat a big plate of unpleasantness when it comes to the high time frame move, but then I'll have some of my best trading days, weeks, or even months following the nuke on like intraday and far lower time frame, either continuation or reversion plays. It's a really strange phenomenon. I don't quite know the explanation for it, but it literally happened on the 9.6k fall, whereby I lost a trade buying this level, and then it crashed, and then literally some of my best trading came within this week here, because I caught much of this wick up, and then managed to catch a ride down as well, which I closed quite early into structure. So that's another thing when it comes to focus and distraction. Even if your system, like mine, is high time frame oriented and skewed, don't just throw everything out the window if you miss out or you're on the wrong side of a move, because the chances are that volatile move will set up some really fantastic lower time frame trading opportunities, some lower time frame volatility, and you can make back, even though that shouldn't be your mindset, you can certainly make back that loss, and generally there are far more setups in terms of frequency if your system caters for intraday type of stuff. Does that make sense? I hope it does. So yeah, that's Bitcoin for me. 10.3, 10.7, close below 10.3. We're trading back within the range. Hopefully you all know how to trade these clusters now. We can also talk about it when we get there, but go watch the ETH video on the channel where I talk a lot about doing business within these consolidations. I don't think that will be the worst trading period in the world, but we'll have to deal with it. Closes that take place, as I said, within this consolidation. I think I'll probably be short-term bullish bias to at least retest 10.7, if not 11.4, but I'll certainly be neutral if we just close kind of where we are now within here. And then shorter-term bullish if we close above the upper boundary through 10.7, because at that point there's a good chance we get an 11.4 retest, And I think there's some space for longs from A to B in that instance, and probably some offside squeezing of those who sold in this monthly area. So that's the short-term plan. Let me see if I've missed anything. Not really. I think that's all I've got for now. Any questions? Let me actually read the chat very quickly. Hey, Cred, except for you, Don, and Trader Z, who are other good YouTubers do you reckon are good at PA trading? George Crypto does some videos from time to time. I enjoy his views. Trader Main does metals with Main and some other stuff. He's very good. Yeah, I don't spend a bunch of time on YouTube, but those two gents certainly come to mind. Let's see what other questions we've got. Chris Ray says, I'm actually asking what weighs more in terms of a level holding, a monthly level from 2 years ago or a weekly level from 2 months ago? It really depends on the context, Chris. I don't think time frame, I don't think recency is the sole determinating factor in terms of what makes a level good or bad. It's just a lot of context. What's above it? What's below it? Where's the market coming from? What's it reacting to? All that sort of stuff. I wish I could give you a better answer than that, but I use all of this stuff to provide me with context, and without seeing it on the chart where it is relative to other structure, I can't give you a fantastic answer. Generally, if there's more confluence in one area than another, it's probably pretty good. If that level is formed at a key turning point in terms of market structure, like where market structure on a high time frame shifted bullish or bearish, that level is also one I'll give preferential treatment to. So just some things to consider. But for the most part, I don't have a very clear hierarchy in terms of this comes first, this comes second, and like this is more important than this in a very formulaic way. It's mostly discretionary and contextual type of thing. Great answer, I know. I was wondering, can you tell us how to manage leverage number? I've got an article from 2018, but it's also in my Twitter pinned tweet. It's just a guide to position sizing and leverage. I think that will answer most questions you've got, and certainly better than I can explain in a video. What other questions have we got? Do I give any credence to cycles in Bitcoin? I mean, sure. Market cycles are a thing, but I'm not sure my trading system particularly caters well to them. Do I use RSI? I don't. Any further weight you might derive from the quarterly close at the end of the month? Good question, Intramoto. I don't know. Not as a practice. Not something I generally pay that much attention to. I think weekly, for me, weekly and daily is kind of bread and butter, but I mean, I'll take a peek. Can't hurt, right? Poop lover. Oh, well, Stelios says, what's the criteria for you of drawing shelves type of SR? The shelves are just a convenient term, but generally it happens when I get two high time frame levels that are close to each other, especially ones that are on a similar time frame, like in this case, quarterly, monthly. A $400 kind of range between two levels on such a high time frame. You could even just box that out and treat that as one area. So these kind of shelves, there's nothing specific or technically magical about any of them. It's just the fact that I've gone on the time frame, like in this case the monthly, and I've got two levels that are pretty close to each other. So that's why it's a shelf. It doesn't mean anything special. It doesn't have any special properties either. A poop lover. Thoughts on Woonomics 9.6k support? I mean, I've got that level as well, so I guess I agree that it's support, but I certainly need to see some more weakness in order to think that we're gonna go there. Because again, my trading is a very humble endeavor. For the most part, it's one level to the next. So, I mean, obviously, if the market is very strongly trending in one direction, I'll start to make presumptions that it'll reach X, Y, Z, or certain levels are more attractive than others. But for the most part, I don't do that thing where I just lower my target the lower a market goes. If I think there's a good structure that I've predetermined one way or another is significant, I won't skip out on it just because I'm scared or something, you know? kind of have to stick to your ideas sooner rather than later. Niels asks a good question. What would be a crappy daily close? I think a crappy daily close would be below 10.3. That would be a crappy daily close. Yeah, that would be a crappy daily close. Because I think if we close anywhere around here, so between 10.3 and 10.7, so we're around 10.5 right now, I think the kind of magnet for price, if you will, is a 10.7 retest. That could end up being completely wrong. I don't operate strictly off daily close here, therefore up or down to the next level. It could just chop between this area that we've just described and delineated on the weekly. So I don't have very strong views, but yeah, certainly a crappy daily close would be below 10.3, because at that point this would just look like a break below 10.3 and then a bearish retest with a very ugly looking candle if we've got the wick up here, and that would just suggest that previous day's low at that point this isn't going to hold, at the very least a retest of 10k. So yeah, crappy daily close below 10.3 is the short answer. Trader Z, hello, mate. How are you doing? How are you doing, my friend, my bearish friend? The Grim Reaper finally came to collect. About bloody time, mate. Cred, why many alts not dumped hard after such violent Bitcoin drops? Some of them even pumped. Yeah, that's something that I'm paying attention to. A lot of the DeFi ones didn't even look kind of blow off toppy, which is a weird thing. I'd have expected them to just completely get rinsed if it were a true cycle top type of event. There's still time for that to happen, like after a bearish retest that's successful, and then you get the real impulsive leg. But it's certainly a short-term, at least, sign of life that... I mean, if you were to ask Donald, he'd say that it's bearish for Bitcoin, the alts are pumping. I generally tend to agree in this context. But... yeah, I think he's far better equipped to answer that question about shorter term altcoin reversions. How does this bounce look to you so far? I mean, I need a bit more time. It's sort of okay. The wicks are interesting to me. Like when prices within this consolidation, you'd have a really hard time arguing that the market has bottomed, because you know when you get this kind of drop, just droop lower with no real wicks, no real impulsiveness, or just tape speed, velocity, whatever fancy terms you want to use. It certainly didn't look like a bottom or even a short-term low. This type of price action is a lot more interesting, especially you get this type of structure. You get a bounce at a level, and then a candle which nukes the first low, but then closes significantly away from it. That kind of stuff is generally quite constructive. It looks all right for now, but yeah, I'm not rushing to any conclusions. I'm generally not that great at trading immediately after nuke events, unless I had orders in the market, which is increasingly rare these days, or something really nice formed on intraday basis. So, you know, take it as you will. We can look at ETH as well. I think it's a very similar thing with regard to the monthly retest, whereby if you're long in this area, you'll either look like a genius in a week or so, or like a complete melon, right? And the reason I say that is we have this level at 389 or 394 if you use the lowest close. Doesn't really matter too much. Basically at 400. And from a kind of TA perspective point of view, again, technically closed above it. This could be the bullish retest. Then we get continuation into the midpoint of the old range, which is around 530-ish. And then the top of the old range at 679 or something. That's where I think it is. So, like, again, that's why I literally meant it in my tweet in very clear terms, that I will either look like an idiot or a genius by buying 393 or whatever that entry is. Because, you know, if it goes up, I'll get all this, oh, in the future, it's such an obvious setup, right? Monthly break, big scary retest, then the market goes up. Like, yeah, maybe it'll be obvious in hindsight, but go look on Twitter for the last 24, 48 hours and then tell me that it's like an obvious long setup, right? These things can warp our perceptions quite viciously. But at the same time, if we get this sort of thing, right, a failure to reclaim the old trading range, this consolidation here, I look like a complete mug buying the failed breakout as the market nukes down towards at least 300, the area of market structure. But if you ask Donald, far lower than that. So I've got 3 monitors. So yeah, that's kind of ETH. That's where it is. That's why I'm not rushing to any conclusions. I'm just kind of doing business at the level, and then we'll kind of see what happens. It certainly doesn't look good at the moment. If I'm making daily assessments from the available evidence, however you want to draw this level at 389, 395, just looking at the daily time frame. And again, you do have to, it's a balancing act. Like, I know it's a monthly level. Ideally, we're looking on the weekly time frame to get some sense of clarity or signals, but looking at the daily time frame isn't the worst either. But it gets less certain the lower time frame you go, right? Like, if we're trading monthly levels, what time frame is the quote-unquote best in terms of certainty for trading these levels? Well, it's going to be the monthly, right? Monthly closes at monthly levels. That's not practical. Then we go to the weekly. Is that as certain, or does it provide the same degree of certainty as the monthly time frame? No. However, it is faster, so we can actually trade it. So that's the balance there. And then as you kind of go down in time frames, you get a boost in speed, right? So you can make decisions quicker and get more information, but you typically get a decrease in accuracy of the signals that are being given or generated by the lower time frames at higher time frame levels. So looking at the daily time frame kind of looks like dog poop right now. Just based off the available technicals, because you will have had a strong close below the level, technically a bullish spike below previous day's low today, but which seemingly is going to resolve as a bearish retest of the high time frame level. Now, again, from my trading journal, whatever point of view, I can get a conservative exit signal if I just puke the daily close at that point. So this is something my system caters for. If I buy near the first test of a high time frame level, and then something like this happens in the daily time frame, the setup just gets cratered and literally turns bearish, I'm allowed to puke that and then relong something like this or something like this. Okay, so I mean, I'll make that determination close to the daily close. I said it's a conservative signal. That was a misstatement. It's technically aggressive because more conservative or reliable signals would come from the weekly close. So I might wait for that. I might just puke the daily close and look for a better re-entry. It really depends. I'll make that decision a bit later. Donald is a bear by default because he doesn't believe in Bitcoin and isn't invested in it. That is categorically false. Cred, you sound half American and half British. I'm not sure I agree with that. Alex says Bybit link still doesn't work. Is that true? Can you guys click the... That's not even me baiting you. Can you click the link in the description and let me know if it works or doesn't work? Yeah. So ETH, again, it's really this monthly area that's a do or die type of level. In terms of its actual technical significance. Okay, you don't need to try it. Enough people said it works. Thanks, guys. I'm not trying to goad you in. It's not some ref link or whatever. So yeah, monthly, I want to get at least a weekly close to see if this thing has a chance of bouncing. The daily time frame kind of looks crap because it's a close and retest. I think what might end up happening, and depends on the daily close and where it closes and some other markets, is certainly if it's near enough to my entry right now, I think a reasonable decision would be for me to just puke it out, and then I'd rather get involved in strength through the level or something, rather than hoping that the bearish retest somehow becomes not bearish, right? Because again, I think the best we can do is just trade what's in front of us and act on the available evidence, right? So as the market progresses, like let's say the market's flying into the level, my odds are kind of good, it closes above the level, that's generally positive, retest the level, still absolutely fine. Closes below the level, let's say the EV or expectancy of the setup playing out positively is lower than it was, right? So price action is always an evolving thing. Taking a trade at 394. Like, is it a good idea when the market's up here? Like, probably. Up here, probably. Like, at the level, sure, that's a great place to take it because you're much closer to invalidation. But if you were to tell me that the market's now... It's like, if the market's up here and you said, do you want to buy monthly support? I'd say absolutely yes, right? And then let's say the market closes through the level and comes back to retest it, and then you offer me the same entry. Do you want to buy this level here? Because of the context and how the market's not here anymore, but it's coming from under to retest, that obviously changes my decision, right? Or the context under which, or in which that decision is made. So that's what I mean by the, you know, this price action, and these levels aren't just lines in the sand and we punt around them. They evolve, and the risk profile around them revolves and evolves as well, right? So in this instance, if I get a daily close that looks something like this, where my monthly level of support is broken and retested as resistance, I don't like the setup as much as I did on the first drop, right? I think that's kind of logical, especially because I'm not too sweaty about getting back in. Like I said, either break the level, retest, and I'll get continuation with like a very clear risk definition, break consolidation into continuation. If we want to use FTA video concepts, a break of FTA is also totally valid, right, at 410, getting involved here with some sort of risk definition below the level, etc., etc. So if the market is telling me two things, that one, my idea is playing out significantly differently from what I expected, and then two, that there's a good chance that I can still get on board this idea just under better circumstances, that's plenty enough for me to, from a trade management point of view, say, okay, whatever, I'll jump out. Does that make sense? Does the logic kind of appeal to you? I don't know. That's just how my brain works. That's really the best I can give you. Okay, cool. Cool. And for those of you asking, like, how's the bounce right now or whatever, if there wasn't a question like that earlier, it looks all right. I think very similar to Bitcoin, whereby it certainly didn't look bottomy on these drops through these levels. And I kind of shit-talked Gainsey as a mate because he got a better entry. I think he got 392 or something, so we both got involved at around 390s. And then the market floated up, and then I commented on this thing saying, if it doesn't retest, I'll become an Uber driver, right? I think it was just around here. And this is just an observation from, previous live streams, that when you get these high time frame levels, it's so likely on an intraday basis the price will come back and retest them, and even more so than coming back and retesting the level itself, it will more often than not flush the guys who get involved in the very first test of the level. So like right now it looks a bit precarious because it went significant to the bottom of the range, and not all the price action is contained around the level. But what you'll often see, if it's even slightly cleaner, is, and I've drawn this diagram a million times, this is the high time frame level, right? You get the drop into it, first test, best test gets the bounce, and then the market, does whatever, gives them some unrealized P&L, then comes in and actually hits the kind of extreme of the level or structure below it, or, the max pain, whatever you want to call it. And when it does that, when it makes that retest, if you're one of the enthusiastic traders who just, I caught the low, I'm going to put my stop loss at break even, the market comes in, flushes those guys out by trading below the low, and then you get the real kind of high time frame move once the first test, best test, people who misunderstand that concept get flushed from the trade. This current price action isn't the best example of that, simply because of how it looks, but that's something to be aware of, and that's where that idea comes from. Like, if it doesn't retest, I'll become an Uber driver. It's simply because it's very rare that price will hit a high time frame level and then just completely reverse from it. These retests are common, and that's why for swing trading, certainly those who follow higher time frame systems, I always say you should be able to stomach a retest of your entry, and if you can't, then you're probably not swing trading, right? And that whole explanation feeds into my trading system, again, something we've discussed in previous live streams, where it's all high time frame oriented, but setup one, if I'm trading the first test, it'll be to low time frame target, right? And it's a low time frame target because I'm expecting the high time frame level to be retested. And then if it comes back, right, on the return, that's going to be where I look to build towards higher time frame targets. Okay? So again, the model, high time frame logic, and I trade two setups. One is high time frame level into low time frame FTA, and that typically happens on the first test. And then the second is once or if the market eventually returns and builds some structure, etc., that will be the high time frame into high time frame FTA. So this is kind of my hybrid system, if you will, where it is high time frame oriented either way, but I get my day trading setups from this, and my shorter term setups from this, and my swings from the second one. Does that make sense? Cool. Now, I think it's a great time, and thank you for 145 likes. You guys are the bloody best. Appreciate all your love and support. I think it's a perfect time to round off with the clarification on first test, best test, and why it doesn't mean what a lot of people think it means. Okay, or at least that sounds very kind of arrogant. Let me rephrase. First test, best test, why I interpret it differently from what may seem to be intuitive. How about that? Slightly more intellectually humble, because let's face it, nothing about this is intellectual. Anyway, so should we open up Paint? No, I think if I open up Windows, all sorts of dodgy stuff is going to come up. So we're going to stick to TradingView. Okay, here's our canvas. Now, in terms of first test, best test, I'm gonna outline what it's understood to be generally, which is that when you have a level, so let's say this level of resistance, okay, once that level is broken as support, and then as resistance, and then the market comes back to test it as support, a common understanding of first test, best test dictates that the highest probability trade is the first time that the previous highs or the broken resistance is retested as support. So for example, if the market does something like this and then comes back, if the way first test, best test is generally understood is that setup number one here is a higher probability setup than setup number two, because the fresh test of this previous level is better than any further recurring test of that level. And there's some sort of like diminishing returns logic to it in many cases, whereby the first test is the best test, and that's better than the second one, which is better than the third one, and then eventually, once we get past 3, 4, or whatever, we maybe don't want to trade that level at all, and instead kind of shift bias into waiting for a breakdown, and the probabilities shift from buying this level is amazing into maybe by the 4th or 5th test, you're even saying, I don't want to buy the level, and maybe I want to sell the underside. Okay? So that's what's commonly understood by first test, best test, and I don't think there's anything wrong with that understanding. I just think timeframes mess it up. So, are you with me so far? Does that make sense? So, like, from that diagram presented? Okay, cool. Intramoto says yes, and I trust him. So, look, there's nothing wrong with that. However, timeframes make things slightly more nuanced. What you'll see people mess up is usually the idea of first test, best test when it comes to high time frame levels. And the explain like I'm 5 summary, too long, didn't watch, is that a high time frame first test, best test can contain several intraday tests, but they still count as one because it's one test on the higher time frame. So let me give you an example. Let's draw the same level and say it's a weekly level, okay? So this is a weekly level. Let's draw it a bit higher so we can kind of get both perspectives. Here we go. This is our dividing line. This is our level, and it's on the weekly time frame, okay? We're going to draw a similar structure. We add resistance, whatever, the breakout, and then the market pulls back. Sorry, that's really ugly. I don't know why I did that. Hold up. We have a level, then it doesn't need to be a box. Enough of those. It's on the weekly time frame. Previous resistance, broken, and then the market's pulling back to it. So first test, best test would dictate or suggest, dictate is a bit extreme, that the highest probability long setup is on this leg of the move into the level, right? Something like this. There we go. So this is the first test, best test. Now keep an eye on the time frame. This is important. So this, what I've just drawn on in the upper box, I completely agree with. Now what people confuse this with is the following. Let's take the same weekly level. By the way, this is going to be on the weekly time frame. This is important, right? So weekly time frame, looking at a weekly level. Now this is where the majority of what I feel are errors or misinterpretations come in. Let's draw the same level, right? Weekly. Again, here. Weekly level. But this time, the time frame we're going to be using is the, whatever, low time frame. Let's even say like hourly, M15, etc. Your intraday bread and butter, right? Note the difference. Here, this diagram is on the weekly, diagram below is on the low time frame. But it's the same level. You know, this is the same. So let's draw it. Add what we added in the upper box. Resistance, resistance, break. And then the market starts to pull back. What you'll often see is you'll get like an initial little bounce from the level, a bit of continuation, and then usually a spike at or slightly below the level, spends a bit of time there, gets bought up violently or maybe makes a lower high, comes back to the level again, etc. So if you're viewing this type of price action, you might think, you know, and then it comes back again maybe, because this is a weekly level, right? We're expecting price. Price can reasonably spend like a whole week here, or at least several days if we're dealing with a weekly level. And then it comes, you know, maybe it makes a higher high after doing that, and then it comes back to the level again, and then let's say the market is right here. Okay? And we're viewing this weekly level, again, same thing, from an intraday lens. If we are right here, and I'm going to even circle this in blue, so we are analyzing the market in this instance. The mistake I think a lot of people make is they count the intraday touches on the level as if it's an intraday level. So they'll say, well, this level was tested once. It was kind of tested a second time. Okay, the market came back to it. Sort of unclear what happened here, but I mean, it tested the level. So 2 tests, 3 tests, and now, you know, we got a 4th bounce, and by the time it comes back to this level, this is test number kind of 4 or 5. And at that point, they'll say, well, I don't think this is a high probability setup anymore because the first test, the best test was here, and now it's coming back for the 5th time, so I don't want to trade it. But then if they were to literally click this button on the weekly time frame and look at the price action, literally this is happening. Do you see where I'm going with this? So what may look like several tests of a level or price maybe even bouncing along a level, things that are typically bearish, you need to judge them on the appropriate time frame. This is a weekly level and this is test number 1, right? So all of this is still test number 1. So none of this is bearish, right? It's just looking at a very low time frame perspective of a totally normal / bullish first test. Now, yes, if the market then forms a swing touch, like this price action eventually resolves and gives you the weekly move and then comes back to it later, yes, you know, this whole bit of price action would be swing touch number 1, and then whatever happens here would be swing touch number 2. But this intraday price action within the bigger picture is still the first test, best test. So first test, best test doesn't mean on every single time frame ever. It means on the time frame where the level comes from. Does that make sense? So like you might be completely sweating over price action, like it's above the level, it's below the level, it's chopping at the level, and then you just click on the weekly time frame and you're like, oh, this is just a weekly wick. Nothing really happened here. Or same on the daily time frame. You'll have this high time frame level and you're completely, you know, you've just spent a whole day staring at a level, watching price above, below, strong impulse move, engulfing candle, and then you look at the daily candle and all it did was just wick and close above the level. So you're like, oh, well, all right. Fine. So yeah, that's my quick explanation on first test, best test. It doesn't mean the very, very first test on every time frame or on the lowest time frame possible, right? Don't read into the wick so to speak. Hope that was helpful. That's certainly, and I kind of learned that the hard way with my own trading at these levels, because I would literally buy the first test, best test, like every single time. I literally have limit orders in the market and say, yeah, first test, best test. And I was that guy who would completely get rinsed on these sorts of moves, right? Where I'd have the high time frame level, I'd say first test, best test, price would come into it and give me a nice little dopamine bump on the bounce. I would think, oh, that's absolutely sick. I just get to put my stop here at the level now. If it's the first test, best test, like this is the best trade available, right? Why would it ever go below this low if I've just taken the best trade on the table? And then naturally what would happen is, whatever, it would start chopping, my P&L fine, still green, my stop was at the low, then would come back and take me out, and do something like this, maybe and then give me the high time frame move after stopping me out, obviously. And I'd think, oh my god, this makes no sense. This was the easiest trade on the table, not this price action here. And then I would look on the higher time frame charts, like let's say this is hourly, and then I'd look on the higher time frame chart, and all of this torture was literally just kind of wick slightly below the level, close above it, and then higher. And I ended up being stopped out like here, just because I got involved on like a puny bounce in the interim. You kind of see what I'm saying? So I suppose a mental kind of check you can do in terms of first test, best test is ask yourself, is this the first swing touch of this level on a high time frame basis? Or something like that. But I think if you kind of get this in your head in some way or another, it'll help. Hopefully. ETH example? I don't know if I have any examples available. This isn't a bad example, right? So hold on, where did this daily level come from? What's the date? The bottom of this range, 2nd of August. Is that where this is anchored? 2nd of August, yeah. So let's say you had this daily level formed from this structure here. Hold on. So we know this is a daily level which formed here. So then the market's coming into it. At this point, this is technically the first test, best test, right? And you do get a bounce. However, it then basically does nothing, right? It gets stuck at resistance on intraday basis, and then comes back to retest it on this instance. And you get a thing is, in terms of swing touches, I count this as one test. Because when it comes to counting, 1, 2, 3, 4, A, B, C, right, Elliott waves. When it comes to counting, I count swing touches. So if I see something like this, where there's no kind of impulse away from a level, and it comes back and kisses it twice, that's still one touch for me. It's like one event, right? So the first test, best test trade is here. So maybe you will have been spooked out of taking this trade at the daily level as well. But that doesn't make it a bad setup. Because, I mean, on the daily time, I think on the daily time frame, this might be like a second test. Again, it's not the best example. I don't have examples of this prepared. But generally, if this time scale were narrower, it would look something like this. That you get a nice generous bounce from the level at first. Then it comes back and you may be stopped out if you put your stop too aggressively or thought, that was it. And then the real bounce will come on the second or third intraday test at the high time frame level. Again, not a perfect example. I'm sure you can find better ones. Obviously not prepared this, so sure you can cut me some slack on that front. But yeah, something like that. Scott Kennedy, Craig, you marked out an area of consolidation to keep an eye out that you went over in your most recent short ETH video. Price dropped through, it's kind of retesting the area from below. Could you go over what you think about that area now since the drop closed back within until bullish? Thanks. Fantastic question. Yeah, we can certainly look at that. So it's basically the monthly levels we talked about in one form or another. we can delineate them on the weekly. Intramoto asks a good question. Would you ever front run the weekly close with the 3-day close entry? My entries generally don't come off of closes themselves. I might use the 3-day for context at a weekly level, but to be completely honest with you, 99% of the time, I'm either using the weekly or the daily. I can't remember the last time I used the weekly to inform, the 3-day to inform myself of a weekly close. I'll either look at dailies or weeklies for the most part, but I don't see anything wrong with the idea. Sorry, Scott, back to your question. So the structure would be this close here, and now you're saying price is approaching it from the underside. Yes, it is, but my views on the level haven't quite changed yet, and the reason is this 390s area is predicated or based on, not predicated, based on the month, or derived from the monthly and the weekly time frame, and so far the evidence is mixed, because yes, from a daily point of view, it's a bearish retest. Let me just make that clear. On the daily, this is a bearish retest, and a daily close below it just wouldn't look good. That would certainly shift the odds in my mind from bullish continuation to another leg down or some sort of reversal. So as I discussed earlier, I think if we get a daily, unless we basically fill in most of this daily high and close significantly through the level, I think that the stronger setups will come from not the underside of the level, but the top side, right? So if daily close around here, having broken below and retested it, I think you're spot on that, you know, price doing this, right, is far less attractive than price doing this, or, you know, or something like this. So if again, context matters, it's not just levels. So the current context we're being presented with looks rough. It's the bearish one, whereby this high time frame area of support, monthly we know, but weekly as well, is acting as resistance following a bearish retest. So the context isn't good. If it closes like this, as I suggested earlier, I'll probably end up puking my position and looking for one of these better and or clearer structures to form. So to answer your question, just to make sure I'm getting it, could you go over what you think about that area now since the drop? Yes, I think I'm cautiously treating it as resistance from what the daily time frame is telling me. If I wanted to be conservative, I could just stick to the weekly to make sure I get a clear view. So that's what I think of the level now. And are closers back within still bullish? Yes, I would say closers back within are still bullish. That will be evidence of the higher time frame ideas playing out and a kind of failed bearish retest. But I certainly would have no qualms being more conservative and demanding not just closers back within, but maybe even a break of FTA, something like this level here, and only getting involved on something like this. Does that answer your question, Scott? I hope it does. Cred, when price gets to a daily level and spends multiple days there and tests the level multiple times, would you count that as multiple tests on the daily, right? It depends. It depends. If there's no space between those daily tests, I'll still count it as one long swing touch, right? Because again, I think the way I like to count is based on swing touches. So if we're talking multiple days at a daily level, so this is our daily level and all the time frames are aligned, and price will just come in to a level, bounce a little bit, and then just kind of spend most of the closes like at the level itself, I would still count it as one touch, right? But if I'm expecting there's like a time limit to, especially if we're using daily candles at daily levels, then that means you have to do less guesswork with regard to is acting as support, is acting as resistance, is it doing its job, etc. If I'm dealing with a daily level, normally, and this is me eyeballing it because I don't have the stats at hand, or just actually don't have stats on this at all, it generally doesn't take longer, especially if it's just a daily level and it doesn't have like any weekly context or anything like that. If it's just daily closes at a daily level, it shouldn't really be spending more than like a week at most at the level if I'm going to get some sort of setup or idea there. So there are kind of two things going on. One is the number of touches, which I'll still count based on swing touches. So if it's literally just doing some shit like this, that still counts as one swing touch. However, that doesn't mean I'm just as bullish at the start as I was at the beginning. The second thing to consider is, well, how long can price reasonably spend here without it suggesting strength or weakness or whatever, fatigue at the level? And if we're talking daily to daily and no higher time frame context, if it spends more than kind of 4 or 5 days or the majority of a week just simply not budging, that consolidation doesn't tend to be bullish. The Funky Gabe, does that answer your question? Again, it's hard to do hypotheticals because a lot of this is very contextual, and I'd need to see the chart to come up with some sort of reasonable answer. But in terms of context and structure, that's sort of what I'm going for. Yes, perfect. Thank you. Okay, guys and girls, hope you've enjoyed Casual Friday. I have. Your questions have been great, and it's nice to speak with, or at, in many cases, so many of you. Keep the quality high around here. Like the video if you haven't already. This sort of stuff helps out the algos a lot. And thank you to Bybit for sponsoring Technical Roundup. The newsletter, the YouTube channel, the tramp stamp I've got now, and the face tattoo that's coming in 2 weeks. So those are all very interesting features to look forward to, and I'm grateful for their support. In terms of content going forward, you'll have me again on Monday to cry and lament the weekly close, by the looks of things. And then the newsletter on Tuesday, Duck on Wednesday, and yeah, one of these bits of content is going to get done. Maybe I'll do the first test, best test, or one of the articles, but I will make sure there is a video on the Technical Roundup channel or an article on Twitter or whatever next week as well. So plenty to look forward to. The market's an interesting spot. Let's try to keep our shirts. And yeah, that's all I've got. If you have any guest suggestions, leave them in the comments on this video and we'll try to get it sorted. We've been pretty terrible with that, but always room for improvement. As always, thank you for being a fantastic audience. Have a very safe and sensible weekend. I doubt it'll change from just staring at charts where the market is right now. And I'm going to stop rambling and see you on Monday. Take care.